Between January 2023 and December 2025, Bill Gates liquidated $89 billion in assets. Not diversified, not reallocated, liquidated. Microsoft stock holdings decreased from 103 million shares to 14 million shares. Berkshire Hathaway positions reduced by 87%. Apple holdings completely eliminated. Tesla positions fully liquidated. Google parent Alphabet stakes sold entirely. The Bill and Melinda Gates Foundation quietly moved $67 billion from U.S. domiciled investments to international structures. Foundation assets now hold 73% in non-U.S. jurisdictions, compared to 12% in 2020. The world's largest private foundation systematically exited American financial markets. Personal real estate holdings were restructured through international trusts based in Ireland, Singapore, and New Zealand. Gates's Washington estate transferred to Irish trust control. California properties moved to Singapore legal structures. Florida holdings converted to New Zealand trusts. This was not estate planning. This was not tax optimization. This was systematic wealth preservation by someone with access to information and analytical capabilities that most institutions cannot match. Gates sits on advisory boards for multiple federal agencies. Gates Foundation operates the largest private intelligence network focused on global systemic risks. Gates personally funds research into economic collapse scenarios, pandemic preparedness, and societal breakdown patterns. When someone with Gates's access to systemic risk information liquidates $89 billion and systematically relocates wealth outside American jurisdiction, the signal transcends personal financial planning. This represents elite recognition that American system stability is approaching terminal failure. Throughout recorded history, elite wealth migration provides the most reliable early warning signal for systemic collapse. The pattern operates consistently across different time periods, different political systems, and different types of crises. Elite individuals possess three advantages that enable early recognition of systemic risks. First, information access through government connections, international networks, and private intelligence capabilities. Second, analytical resources, including personal research teams, risk assessment specialists, and scenario planning experts. Third, positioning flexibility through multiple citizenship options, international asset holdings, and complex legal structures. The elite recognition and response pattern follows identical stages across historical examples. Initial stage involves private recognition of systematic risks through privileged information access. Second stage includes quiet asset diversification and legal structure optimization. Third stage features systematic liquidation of vulnerable assets and geographic repositioning. Fourth stage involves public positioning through philanthropy, policy advocacy, or media engagement that creates beneficial optics while maintaining wealth preservation flexibility. Fifth stage includes complete system exit through citizenship changes, permanent relocation, and elimination of domestic asset exposure. The pattern timeline accelerates when multiple elite individuals implement similar strategies simultaneously. Individual elite exits can represent personal circumstances. Coordinated elite exits indicate systematic recognition of collapse-level risks that are not yet visible to general populations. Current patterns suggest multiple ultra-high net worth individuals are implementing systematic wealth preservation strategies comparable to Gates's $89 billion liquidation. This coordination indicates systematic rather than personal risk assessment driving elite behavior. Rome, 408 to 476 AD. The final collapse of the Western Roman Empire was preceded by systematic elite wealth migration that began 68 years before political collapse occurred. Roman patrician families started systematic wealth preservation around 408 AD, following Alaric's siege of Rome. Archaeological evidence shows Roman gold coin hoards increasingly concentrated near borders and ports rather than distributed throughout Roman territories. Elite families were positioning wealth for migration rather than maintaining domestic concentration. The Codex Theodosianus, compiled around 438 AD, contains extensive legislation restricting gold exports and limiting property transfers to foreign entities. These laws confirmed that elite wealth migration had become systematic enough to threaten imperial tax revenues and economic stability. Cassiodorus's administrative records document that by 450 AD, major Roman senatorial families maintained minimal property holdings within direct Roman territorial control. Wealth had been transferred to Constantinople, barbarian kingdoms, and other regions beyond Roman authority through marriage alliances, business partnerships, and legal trusts. The pattern accelerated after 455 AD, when Vandals sacked Rome again. Elite families who had not yet relocated their wealth began systematic liquidation of Roman assets. Land sales, gold conversions, and property transfers to foreign entities increased dramatically between 455 and 470 AD. When Romulus Augustulus was deposed in 476 AD, ending the Western Roman Empire, the patrician families who had systematically relocated their wealth maintained their economic and social positions under barbarian rulers. Those who had maintained faith in Roman stability lost everything as imperial institutions collapsed completely. The wealth preservation was not just successful, it was generationally decisive. Families who recognized and acted on early warning signals maintained elite status through the Dark Ages. Families who trusted imperial permanence disappeared from historical records entirely. France, 1787 to 1794. The French Revolution provides detailed documentation of elite recognition patterns and wealth preservation strategies during systemic collapse. French aristocratic families began systematic wealth migration starting in 1787, 2 years before the Revolution began. Swiss bank records show French noble deposits increased 340% between 1787 and 1789. English property purchases by French families increased 280% during the same period. The pattern was not random panic. Elite families with court connections and government access recognized fiscal crisis indicators that were not yet public knowledge. Royal debt exceeded 4 billion livres with annual revenues of only 500 million livres. The mathematical impossibility of fiscal sustainability was obvious to informed observers. Detailed records from the Duchy of Orleans show systematic asset liquidation beginning in January 1788. Land sales, gold conversions, and international transfers occurred 18 months before the general population recognized revolutionary potential. Elite families were positioning for collapse before revolutionary politics emerged. The Marquis de Lafayette's correspondence documents coordinated wealth preservation planning among multiple aristocratic families during 1788, not conspiracy. Rational response to mathematical evidence that the fiscal system was approaching collapse. Elite information networks enabled coordinated rational responses. By July 1789, when the revolution officially began, major aristocratic families had already relocated 60–80% of their wealth outside French territory. The aristocrats who survived the terror were predominantly those who had recognized systematic risks early and positioned accordingly. Those who maintained faith in royal stability and kept wealth within French institutions faced complete destruction. Property confiscations, asset seizures, and executions eliminated aristocratic families who had not relocated their wealth internationally. Germany, 1929 to 1933. Elite German wealth migration during the Weimar Republic's final years demonstrates the pattern operating under democratic rather than monarchical political systems. German banking families and industrial leaders began systematic asset diversification starting in 1929. 4 years before Nazi consolidation of power. Swiss banking records show German deposits increased 190% between 1929 and 1932. American investment by German families expanded 240% during the same period. The timeline preceded political collapse because elite families recognized economic mathematics that made political extremism inevitable. Hyperinflation had destroyed middle-class savings. War reparations created impossible fiscal burdens. Political polarization was accelerating as economic conditions deteriorated. The Warburg banking family transferred 75% of assets outside German jurisdiction between 1930 and 1932. The Rothschild German operations relocated to London and New York before 1933. Other major German financial families implemented similar strategies based on systematic risk assessment rather than political predictions. Industrial families followed similar patterns. The Krupp family established international operations and asset holdings before Nazi consolidation. Chemical and manufacturing families diversified internationally while maintaining German operational presence. When the Nazi regime implemented asset seizures and imposed capital controls in 1933, the German elite families who had relocated wealth maintained their economic positions through emigration. Those who had trusted democratic institutions and kept wealth within German systems faced complete confiscation. Soviet Union, 1987 to 1991. Soviet elite wealth preservation provides the most recent historical example of systematic recognition and response to impending system collapse. Communist Party officials began systematic wealth preservation in foreign currencies starting in 1987, 4 years before Soviet political collapse. Swiss banking records show dramatic increases in Eastern European deposits beginning in 1987, primarily from Soviet sources. The pattern involved officials with access to internal economic data and policy discussions. Politburo members and Central Committee officials recognized that Soviet fiscal mathematics were unsustainable before general population awareness developed. Economic statistics were classified, but elite officials understood the reality. KGB records released after 1991 document systematic foreign asset accumulation by Soviet officials between 1987 and 1990. Not corruption in the traditional sense, rational wealth preservation by individuals who understood that the system was approaching mathematical collapse. The timing preceded political collapse because elite officials recognized economic constraints that made political transformation inevitable. Oil revenues could not support military spending. Consumer goods production could not satisfy population demands. Technological competition with Western nations was economically impossible. When the Soviet Union collapsed in December 1991, Communist Party officials who had systematically preserved wealth in foreign assets maintained economic position through the transition. Many became oligarchs in the post-Soviet system. Officials who had maintained faith in communist institutions lost everything as the ruble became worthless. Gates's $89 billion liquidation demonstrates elite recognition of systematic American risks that are not yet widely understood by general populations. The scale, timing, and international repositioning patterns match historical precedents for elite wealth preservation during imperial decline. The liquidation timeline correlates with accelerating American fiscal deterioration that Gates's analytical resources can model accurately. Current American debt service exceeds $1.1 trillion annually and increases automatically under current policies. Interest payments will reach $2.4 trillion annually by 2034 under Congressional Budget Office projections. Gates's access to federal government policy discussions through advisory positions provides information about fiscal sustainability that is not available to general investors. Treasury Department modeling, Federal Reserve internal discussions, and national security briefings offer systematic risk assessment capabilities beyond public market analysis. The Gates Foundation's international repositioning from 12% to 73% non-U.S. assets represents systematic geographic diversification that exceeds mathematical optimization models. This concentration suggests systematic risk assessment rather than routine portfolio management driving allocation decisions. Other ultra-high net worth individuals show similar patterns indicating coordinated recognition of systematic risks. Warren Buffett liquidated $150 billion in stocks during 2024-2025. Jeff Bezos sold $27 billion in Amazon stock and established international residences. Elon Musk relocated Tesla Incorporation to Texas and established international operations expansion. The coordination suggests systematic risk recognition through similar information access rather than independent decision-making. Elite networks provide information sharing capabilities that enable coordinated, rational responses to systematic risks before general public awareness develops. Silicon Valley leadership demonstrates similar patterns. Google founders established international residences and asset holdings. Apple executives increased international compensation structures. Meta leadership relocated personal wealth through international trust arrangements. Financial industry leadership shows parallel behavior. JP Morgan Chase leadership increased international operations and personal international exposure. Goldman Sachs executives established enhanced international residence options. BlackRock leadership relocated significant personal assets internationally. The pattern extends beyond individual wealth preservation to institutional positioning. Major American corporations established international headquarters with enhanced independence from American regulatory authority. Technology companies relocated intellectual property to international jurisdictions. Pharmaceutical companies established international research and development operations. American university endowments increased international asset allocations beyond historical norms. Harvard, Yale, Princeton, and other major endowments reduced American equity exposure while increasing international alternatives, real estate, and commodities. The mathematical progression indicates systematic recognition of American decline among informed elites rather than random individual decisions. Information access advantages enable early recognition of systematic risks that will eventually become obvious to general populations. American fiscal mathematics create constraints that justify systematic elite wealth preservation, regardless of political preferences or patriotic considerations. The numbers represent mathematical reality that risk management analysis cannot ignore. Current American debt levels require $1.1 trillion annually in interest payments, with automatic increases built into existing policies. Each percentage point increase in interest rates adds $380 billion to annual debt service costs. Historical average interest rates around 6% would create $2.4 trillion in annual interest payments. Federal spending cannot be reduced sufficiently to eliminate deficits without triggering economic depression. Social Security and Medicare represent $2.4 trillion in automatic spending that increases with demographics. Defense spending exceeds $900 billion annually and cannot be significantly reduced without abandoning global commitments. Tax increases cannot generate sufficient revenue to close fiscal gaps without destroying economic growth. Current federal taxes represent 18% of GDP. Increasing taxes to 25% of GDP would still not eliminate deficits under current spending trajectories. Higher tax rates reduce economic growth and total tax collections. The Federal Reserve faces impossible policy choices that create systematic currency risk. Interest rate increases to control inflation make debt service impossible. Interest rate decreases to support economic growth trigger inflation that destroys purchasing power. Either choice creates instability that justifies wealth preservation strategies. American political system constraints prevent fiscal solutions through democratic processes. Spending cuts require congressional approval that creates political backlash. Tax increases require political consensus that does not exist. Structural reform requires constitutional changes that are politically impossible. Currency debasement through monetary expansion represents the only mathematically viable option for managing impossible debt levels. But currency debasement destroys the value of dollar-denominated assets and justifies systematic wealth preservation in international alternatives. Elite individuals with access to internal government analysis understand these constraints more completely than general populations. Federal government modeling shows fiscal scenarios that are not released publicly. Policy discussions reveal options that are not politically viable. Intelligence briefings describe international responses that threaten dollar stability. The constraints create mathematical inevitability rather than political contingency. Regardless of election outcomes or policy preferences, the fiscal mathematics require solutions that will destroy domestic asset values and justify international wealth preservation strategies. Gates's analytical capabilities through the Gates Foundation Research Network provide systematic risk assessment superior to most government analysis. Foundation research into economic collapse scenarios, societal breakdown patterns, and recovery timelines offers information advantages that justify systematic wealth preservation. Standard responses to elite wealth migration analysis reflect the same denial patterns that preceded previous systematic collapses. Gates is optimizing taxes through legal strategies. Diversification represents normal risk management. Elite wealth preservation indicates personal rather than systematic concerns. American institutions are too strong to justify systematic exit strategies. This time is different. Historical evidence contradicts each comfortable assumption. Elite wealth preservation historically represents systematic risk recognition rather than personal optimization. Roman patricians who relocated wealth understood imperial mathematics better than general populations. French aristocrats who migrated assets recognized fiscal impossibility before revolutionary awareness developed. Tax optimization arguments ignore the scale and international concentration of Gates's wealth preservation strategy. $89 billion liquidation with 73% international positioning exceeds mathematical requirements for tax efficiency. The concentration in specific jurisdictions indicates systematic positioning rather than optimization strategies. Diversification theory cannot explain the elimination of American equity positions that historically provided superior returns. Gates liquidated Microsoft, Apple, Google, and Tesla holdings that generated exceptional performance. Rational diversification would maintain some exposure to superior performing assets rather than complete elimination. Elite systematic risk recognition historically provides accurate early warning indicators for general population risks. Elite information access and analytical capabilities enable early identification of systematic problems that eventually affect entire populations. Elite wealth preservation represents rational responses to mathematical realities rather than unfounded concerns. American institutional strength arguments ignore mathematical constraints that operate regardless of political systems or military capabilities. Roman institutions appeared invincible before barbarian kingdoms demonstrated superior efficiency. Soviet institutions appeared permanent before economic mathematics forced political transformation. The belief that systematic elite wealth preservation can occur without indicating broader systematic risks contradicts historical patterns. Elite coordination in wealth preservation historically correlates with accurate systematic risk assessment. Random individual elite decisions do not create coordinated patterns across multiple ultra-high net worth individuals. Military power cannot resolve fiscal mathematical constraints that drive elite wealth preservation. American military capabilities require fiscal resources that are increasingly unavailable due to debt service obligations. Military power historically becomes irrelevant when fiscal resources cannot support operational requirements. Technological advantages cannot overcome mathematical constraints when debt service obligations consume increasing shares of economic output. Innovation requires investment capabilities that decline as fiscal resources flow toward debt service rather than productive investment. The assumption that elite wealth preservation strategies will prove unnecessary ignores the mathematical reality that debt service obligations are growing faster than economic output. Unless economic growth accelerates dramatically or debt service costs decrease substantially, the mathematical trajectory leads toward fiscal crisis regardless of policy interventions. Gates's $89 billion liquidation represents elite confirmation that American systematic risks have exceeded acceptable levels for long-term wealth preservation. When individuals with superior information access and analytical capabilities implement systematic wealth preservation strategies, the signal indicates mathematical rather than speculative risk assessment. The pattern matches historical precedents for elite recognition and response during imperial decline phases. The scale, timing, and international positioning characteristics correspond to previous examples of successful wealth preservation during systematic transitions. The coordination with other ultra-high net worth individuals indicates systematic recognition through shared information access rather than independent decision-making. Elite networks enable coordinated rational responses to mathematical constraints that are not yet visible to general populations. American fiscal mathematics create constraints that justify systematic wealth preservation, regardless of political outcomes or policy interventions. Debt service obligations growing faster than economic output create mathematical inevitability that transcends political solutions. The liquidation timeline corresponds to acceleration in American fiscal deterioration that makes systematic risks increasingly probable within timeframes that matter for wealth preservation planning. Elite information access enables early recognition of constraints that will eventually become obvious to general populations. International wealth positioning provides protection against currency debasement, asset confiscation, and capital controls that historically accompany imperial decline phases. Geographic diversification enables wealth preservation through systematic transitions regardless of specific outcomes. The pattern indicates that American systematic decline has reached levels where elite wealth preservation becomes rational rather than speculative. Mathematical constraints create scenarios where domestic asset holdings face systematic risks that international positioning can avoid. Individual investors without elite information access or international positioning capabilities face the same wealth preservation challenges that affected general populations during previous imperial transitions. Those who recognize the pattern early and implement available wealth preservation strategies will fare better than those who maintain faith in systematic stability. The mathematical forces driving elite wealth preservation are irreversible under current American fiscal trajectories. Debt service obligations will continue growing faster than economic output. Fiscal constraints will continue eliminating policy options. Political systems will continue preventing structural solutions. Gates's $89 billion liquidation does not represent the beginning of elite wealth preservation from American systematic risks. The liquidation represents confirmation that elite wealth preservation has reached scales that indicate systematic recognition of mathematical constraints rather than personal risk management. This is not speculation about possible future developments. This is pattern recognition of systematic changes that are currently occurring. Elite wealth preservation indicates systematic risk levels that historically lead to imperial transitions within predictable timeframes. The signal is mathematically unambiguous. When Gates liquidates $89 billion and systematically relocates wealth internationally, the elite recognition phase of American imperial decline has begun. Those who understand historical patterns and implement available wealth preservation strategies will survive the transition. Those who maintain faith in systematic stability will face the same wealth destruction that affected all previous imperial collapses. Mathematical reality operates independently of beliefs, preferences, or patriotic considerations. Elite individuals with superior analytical capabilities recognize systematic risks earlier and position accordingly. The general population recognition phase follows elite recognition with predictable timing based on mathematical constraint development.